Good evening, class, or good morning for that matter, whenever you have the chance to watch this video upload. So finally, we are on the last leg of our coverage for income taxation. And as the last topic, we will discuss on the CREATE Act of 2021 or RA 11534, which has actually just recently been enacted into law. Dumaan ito sa several readings in the Congress and the Senate before it became a CREATE Act of 2021, naging SETERA law, no, as originally planned in the train package. But anyways, there was not naman overhaul, but there was a revamp or updates, no, on the certain tax privileges and incentives for corporate taxation. No? So for our purpose, we are going to focus on income tax for corporations as part of our coverage. But I'm sure naman that on the VAT discussions, as well as on the transfer taxes and some commodity taxes, we will be discussing that, or you will be discussing that with your professor in taxation too. Okay, so okay, there are three main objectives, no, which prompted the government to came about with the necessary tax reforms for corporation. Actually, this is one of the packages, no, made by the Duterte administration to reform the tax bill in the country. So nauna na yung train law, nauna na rin yung tax amnesty bill for estate taxes, and now this CREATE Act. No? So CREATE means corporate recovery and tax incentives for enterprises. Okay, so there are three main objectives. Why this law came about. Actually, it's a much needed amendment, no, to be aligned with the countries in the Asia Pacific, as well as, you know, the globalization happening and all. So the first objective of your CREATE law is to have a globally competitive tax incentive. Okay, so as you all know, if you've been reading the news, one of the discouragements caused by foreign investors is one of which is the tax rate in the Philippines. So aside from corruption, of course, in the some discouraging factors, one of the main culprit of which is the highest tax rate in the Philippines. Before the CREATE Act, the tax rate for corporation was 35%, and then it was lessened to 30%. No? So with this CREATE Act, the corporate tax rate was further reduced to 25 to 20%, no? To allow naman competition with our neighboring countries. No? So these big investors, when they find the places where they will be able to invest their money, you know, they can consider the Philippines as one of the investing localities, because, you know, aside from, of course, lowering our taxes, Filipinos are more hospitable, and they have, you know, they know the English language, which is beneficial for Western investors. Okay. Now, to solve also the competitiveness over tax incentives, they included certain provisions or tax incentives that have no prescription, because there are encouraged enterprises or those that contribute to the GDP of our economy, especially export-oriented enterprises, that are given tax incentives. However, they are given without any expiration to that effect. So in other words, the tax incentives are given forever. Okay, so sometimes it's prone to abuse, okay, or misuse, and this was also one of the major amendments. So makikita nyo mamaya, no, may income tax holidays tayo, and meron din tayo mga sunset provisions for this encourage enterprises, but they are now limited to about 14 to 17 years. Unlike before na in perpetuity yung exemptions nila. Okay, so that's it, no, globally competitive tax incentives. A second major objective of the CREATE Act is to improve efficiency of corporate tax system. Lowering tax rates, so very, very significant. It's like a 5 to 10% drop. No? So from 30% prior to the CREATE Act, it's now 25%, no, for domestic and resident foreign corporations. And then there are also for MCIT and other taxes, no, for passive incomes. Certain passive income are also reduced. Widening tax base, no, this is naman applicable to the value-added taxes. There are major expansion on what are vatable, which are not vatable before. Okay. Reducing tax distortion and leakages. So there are provisions in the previous law that are insignificant nowadays. Ngayon kasi mas ang focus, because in the CREATE law there is already this FIRB, or yung fiscal incentives regulatory board. So they are composed of the certain people coming from the finance sectors of the government who reevaluates the a tax break, no, kung deserving ba yung certain enterprises to be allowed certain tax breaks. So they do this on a regular monitoring or supervisory manner, unlike before na it's very simplified. So ito, improperly accumulated earnings tax without considering whether the funds are to be needed for expansion. So it's plain and simple. You're taxable with that. So it becomes too simplistic to a point na hindi na siya akma sa reality faced by this corporation. So that's why these FIRB are given the authority to give from time to time interpretations or tax breaks if certain entities are deserving of that. So hindi na siya too simplistic or too idealistic. No? So the purpose now of the CREATE Act was to give or to open certain incentives, no, as a part of the policy making body to those deserving entities that contribute to the economy of the Philippines. So ano na siya, focus na siya on what's happening on the ground. Okay. So that's the second objective. And the third objective is, of course, recovery from global pandemic. So not only the global pandemic, but also unforeseen events. But specifically, the law was created 2021, was enacted rather 2021, but yung effect niya, it's retroactive to the time when the pandemic started. Okay, so makikita nyo may mga further reduction in the rates to consider the pandemic era. No? So usually some tax rates are reduced for the meantime from 2020 July 1 up to, let's say, 2022. Some tax rates up to 2023. So this can be seen naman as a leeway to corporation to help them recover from the damage or financial struggles they are experiencing due to this global COVID-19 pandemic. So pag medyo naka-recover na, makikita nyo class sa batas, come 2022 or 2023, ibabalik na nila doon sa regular rate as originally planned for the CREATE law. So example, MCIT taxes, 1%, no, from July 1, 2020 to June 30, 2022. So for a 2-year period, it's 1%. But come 2023, it's back to the regular MCIT rate. Okay, so that's it. Now moving on, yun. So this is a graphical representation of the fact that before the CREATE law, the Philippines have the highest tax rate in the Asia Pacific countries. So we have 30%. Singapore, it has around 17-18%. No? So kung makikita nyo, a bulk of the funds coming from the Western countries are, syempre, no, they want to experience higher income by having tax cuts. So Singapore is one of the main location of this investment because of the lower tax rate. So Philippines, 30%. So it's like if you're an investor with big money, of course, you would want to find a country that has lower tax rate. So that's also one of the reasons why the CREATE Act allowed for lower corporate income tax rates. Now, so to reiterate, no, this is from ASEAN briefing. So makikita nyo yung mga countries in Asia Pacific. Philippines is the number one when it comes to tax rate. Okay, it is almost double than the amount or tax rate in Singapore. No, so right now comparable na tayo dito sa 20% or 25% ng Myanmar. So at least it's lesser. Okay. Now, another problem that the Philippines is facing is we have tax incentives, but as I said, it's too simplistic to a fault because it's not future oriented. We give incentives to investment companies or to PESA enterprises, but we do not give expiration for these incentives. We give them incentives in perpetuity. And sometimes it's not good, no, because they are prone to abuse. So ngayon, in the CREATE law, mahaba-haba pa rin naman yung tax holidays nila. And aside from that, may sunset provision din naman to extend the income tax holidays. But hindi na katulad dati na walang expiration. So right now, it's more balanced because while the Philippine government recognizes the contribution of this, PESA enterprises, the government also, to balance it out, recognizes the need to create revenues. Okay, so what is the current, the tax incentives prior to the CREATE law? I think it's at 5% of the gross income earnings, no, in lieu of all taxes. So these enterprises pays a fixed rate tax in lieu of all national or local taxes. So they are excused from all other taxes. So instead of paying income tax, value-added tax, some local business taxes, regulatory fees, they only pay a 5% tax, okay, on gross income. Okay, so this is just a purview, no, of the packages created or planned out by the government. So yung CREATE law or CREATE Act is nasa package 2. So yung sa sin tax, mining, real property valuation reform, and so on and so forth. These are also one of those comprehensive tax reform package of the government. So as I said, income tax holiday, these are given to critical exporters and domestic market enterprises, registered enterprises in areas recovering from armed conflict or major disasters, and those companies that relocated outside the NCR probably because of the higher cost in establishing companies therein. No? So to spread out, no, the earning capacities and the employment opportunities. So sometimes these relocation efforts are given incentives. So we call that income tax holiday. Ano ba to? I don't think naman that the bar exam will ask you, no, to identify which of this industry is allowed how many years income tax holiday. What it means, class, is that income tax holiday is granted by giving these enterprises a certain percentage of their income, like kanina, 5% of the gross income earnings in lieu of all taxes. No? So that's income tax holiday. Some are exempt. No? So depending on the location and the need of the enterprise, there is a guideline brought about by the law. And then after this income tax holiday, some enterprises are given the sunset provision, so additional period to extend, no, the incentive given to them. Okay, Now, another innovation in the CREATE Act is yung non-recognition of gain or loss on exchange of property. So, if it's merely reorganization or reincorporation or just exchange of stocks, no, in merger or consolidation, these are totally exempt na. So, sinimplify ng government. Before kasi, there were certain criteria that would, make it taxable. So now it's free from all taxes because ano naman yan eh, usually these are related parties or for example in reincorporation na expire lang yung buhay ng corporation, and then of course it has to register again. So all of the assets of the dead corporation will be transferred to the new corporation. So that act of transferring is not taxable anymore. Or when there is a change in control or when there is merger of similarly situated industries, so there is a need to exchange assets or exchange resources. So there is the act of transferring. But according to CREATE law, it's now non-taxable. So tax exempt. Okay. Now, as we go along with the discussion, I'm gonna try to make it as simplistic as possible. I'm going to, hindi naman you don't need naman to memorize the prior rates. Just a comparison of the incentives, no, from the title of the law itself. These are really tax reform incentives given to corporations. So you would see the consistent decrease in the tax rates, well, except for non-resident foreign corporations, because parang ang trend sa kanila is yung dating exempt or dating may preferential tax rate, ngayon the trend is increasing tax rates, no? So but generally, if you compare the NIRC before with the CREATE Act, the trend for most of these corporations are decreasing tax rates. Okay. So just like in your what you call this individual taxation, as I have discussed before, a corporation is also divided or classified into three. Okay, you have domestic corporation, which is the point of discussion right now. Those are corporations that are registered under the SEC. No? So they operate within the Philippines and that they are regulated by our country, by our government. No? So they are domiciled here in the Philippines. Foreign corporations are established outside the Philippines. So simply, they are divided into two. So just like a resident and a non-resident alien, diba? In your individual income tax. So a resident foreign corporation, for our purpose, are those corporations that are established outside the Philippines, but they operate, they earn significant amount of regular income in the Philippines. That's why they are called resident foreign. So they file also income tax returns for their income earned within. Okay, how about non-resident foreign corporation? So we will discuss further on that. But the point is that non-resident foreign corporation don't really have a regular business conduct in the Philippines. So most of their income are incidental or passive or investment in nature. That's why they are non-resident and they don't have to file income tax return because they are charged with final withholding taxes. So most of their taxes are withholding or final taxes. Okay, so unlike sa individual that are divided into five, corporations for tax purposes are divided into three. So you have domestic, resident foreign corporation, and non-resident foreign corporation. So prior to the CREATE Act, the tax rate is 30%. Actually, dumaan pa yan sa 35%. So it was just reduced. But under the CREATE Act, 25%. So that's the regular corporate rate. How do you compute, ma'am? No? So simply, if you're engaged in selling of goods, so you have your gross sales minus your direct cost or cost of goods sold, you derive the gross income. Okay, and then you further minus that or subtract that with the indirect costs or those ordinary expenses that we also have discussed in individuals. Then you arrive at the net income, or for our purpose, it's taxable income. Okay, so now, the source of the tax rate is with Section 27A. So this was amended, okay? This was amended. So specifically, an income tax rate of 25% effective July 1, 2020 is hereby imposed upon the taxable income. So take note of the term taxable income, meaning a domestic corporation is allowed to deduct from its gross sales or receipts, gross sales class when it earns income or sales from selling of goods, okay, or products. Gross receipts naman if it's service oriented. So when you say taxable income, that's further reduced. The sales are further reduced by direct cost. Okay, so sales minus direct cost, you have gross income. Gross income minus indirect costs or expenses, yung mga deductible expenses na diniscuss natin before sa individual. Similar din sa corporation with the small revisions lang or differences. So gross income minus expenses, you have taxable income. So it is further reduced by taxable income. Why am I discussing this? Because when you go to other types of corporations such as non-resident foreign corporation, they are not allowed to deduct, okay, this deduction. So the tax base for domestic corporation is taxable income. I hope that's clear, ha? Tax rate is 25% effective July 1, 2020. So there is, in this sense, a retroactive effect of the law, because while it was promulgated, or it was it was released 2021, the effectivity of which is retroacted to July 1, no, to give impact on the pandemic-stricken enterprises. Okay? Kasi nag-umpisa yung pandemic mga March. So nag-lockdown tayo mga around this time. So the lower rates is applied to those periods. Okay? So taxable income derived during the taxable year from all sources within and without. No? So global tax. So regardless of where they earn that, as long as they are classified as domestic corporation, they are taxable on all sources, no? By every corporation organized in or existing under the law of the Philippines. So it was established here in the Philippines. It's called a domestic corporation. So again, 25%, it's taxable income, and the source, the situs of income within and outside. Okay. Now, another substantial amendment to the CREATE Act is the preferential rate for MSME. So these are micro, small, medium enterprises that are, incorporated. So they are subject to an even lower rate of 20%, provided that they have they are qualified according to the criteria set by the law. So their net taxable income must not exceed 5 million and their total asset must not exceed 100 million. So if both of these requirements are followed, then they are within the purview of MSME. So thus, they will be taxed at 20%. So the computation of the 100 million excludes land for business establishment. So for example, if a corporation has a main office or has a manufacturing area or has a place where they store their equipment, so those are the valuation of which are excluded in the consideration of the 100 million. So let's say total assets ng corporation is 130 million. But 30 million of that represents the land, no, where the offices are located or where the manufacturing operations are located. So they still belong as an MSME. They are still entitled to the 20%, no, because the computation does not include the land. Okay, so I hope that's clear. Now, RA 11232, which is the amendment or the new Corporation Code of the Philippines, recognizes this new um, kind of corporation. Okay, before the amendment, a corporation is composed of at least 5 incorporators, no? And kailangan may board of directors. In this one-person corporation, a single person can actually form a corporation. Pero hindi siya single proprietor. Ha? It's different because in a single proprietorship, no, I think in your corporation code, ma'am, or in your partnership, okay, in your law and partnership, you will know that a sole proprietor is also a single person. But the difference lie in the rules followed, because all of the provisions that are consistent with corporation applies to a one-person corporation, such as limited liability. No? So it is still a one-person corporation, but um, its liability to creditors is limited to the value of the assets invested in the corporation. Whereas in the sole proprietorship criteria, unlimited yung liability, meaning the creditors can still go against the personal properties not invested by the sole proprietor. So, if you're engaged in a business that you plan to expand maybe in the future, it's nice that, you begin with a one-person corporation. So, however, with that, it also comes with greater regulation because you have to register with the SEC. Okay, and unlike in a sole proprietor, na you are only required to register your business name in the DTI. Okay, so in that case, you also have to consider, because if your business is just small, really small, you don't have to entail higher cost of incorporation in a one-person corporation. But if you have plan to expand, no. Anyways, that's another that's a business advice. That's another topic for consideration. But for our purpose, a one-person corporation is also subject to this 20% MSME preferential tax rate. Okay, that um, provided that the requirement, no, yung requirement na 5 million and 100 million are met. Okay, so for our purpose, corporation includes one-person corporations, partnerships. No, for tax purposes, business partnerships are considered corporation, no matter how created or organized. Joint stock companies, joint accounts. Okay, so yun, those are considered as corporations subject to the 20 or 25% tax rates. Okay, so this is the particular section that was amended to give way to MSME provisions. Okay, so it's nice, no, if you read the law itself, because it will give you the context on how it was presented. I know that there are many books that would offer flowcharts or would present the tax rates in graphical form. Well, it's helpful. However, di ba, pag puro skeleton yung nakikita mo, puro rates, parang walang meaning, walang meat kasi bones lang. So it's really nice to know, to read where these rates are coming from, no? Why are these flowcharts created? So this is the provision. Okay, so that corporations with net taxable income not exceeding 5 million, total assets not exceeding 100 million, excluding the land on which the particular business entity's office, plant, and equipment are situated during the taxable year, for which the tax is imposed. So preferential rate of 20%. Now, further amended class in Create Law was Section 27A, paragraphs 3 and 4. So what will happen to those fiscal year accounting corporations? Because, in accounting, you have two methods, no, of annualizing your balance sheets and your financial statements. So, pwede kang calendar method, your calendar year will begin on January 1 and it will end on December 31. Some corporation would follow the fiscal method. So either of the methods are correct. It's allowed. So because some entities, ma'am, bakit ganun? Bakit may fiscal? Some entities have seasons, no? So that's how they align their operations. So fiscal year, you can pick whatever month, beginning of the first month of any month. So let's say June 1. So that's the beginning of a fiscal year. And then you count 12 months. So May 30. So let's say June 1 to 2020 to May 30, 2021. That's one fiscal cycle. Okay. So in consideration of this, because yung batas, effective siya July 1, 2020. So kung ang ending mo, calendar method, madali lang, di ba? Yung first 6 months mo, you apply the 30% rate, yung old rate. Yung last 6 months mo, from July 1, 2020 to December 31, 2020, you apply the new 25% rate. Now, how about if you're fiscal year accounting? Okay? So sabi ng Section 27A, your income and expenses shall be deemed to have been earned and spent equally for each month of the period. So you don't have to review your reports and make a monthly classification for each month and then arrive at the rates. So to simplify it, okay, the months are considered equally earned. So let's say 120 million yung earnings mo, net taxable income mo for the end of the taxable fiscal accounting period. So let's say November, mag-i-end ka November 30, 2020. So your fiscal accounting period is from December 1, 2019 to November 30, 2020. Okay, so how will you consider the effect of the CREATE Act? So sabi sa batas, you don't need to spend time to look for the monthly earnings for this particular months that are not included in the CREATE Act and those created. So you simply have to divide it by 12 months. So let's say the prior to the CREATE Act, so from December 1, 2019 to June 30, 2020, you apply the old law. From July 1, 2020 to November 30, 2020, you apply the 25% rate. So sabi ko kanina, if the taxable income is 120 million, simply divide it by 12. So you have 10 million each month. Okay, so from December, January, February, March, April, May, June. So 7/12 for the old rate and then 5/12 for the new rate. So it's 50 million times 25% and then 70 million naman times the old rate of 30%. So I hope that's clear, ha? Now, the OGIT, which was also included as part of the option of the corporation, is deleted. Kasi ang hirap mag-qualify nito class sa OGIT. You have to have a certain VAT tax effort. You have to have contributed to a certain percentage of the gross national product, and that your cost of goods sold to your Sales must not exceed 55%. So meaning your gross income must at least be 45%. So very, sabi ko, simplistic, very ideal. So ngayon ang ginawa ng mga natin ng create law was situation based on situational consideration. That's why na-create yung FIRB, no? So Fiscal Incentive Review Board, wherein bibigyan ng incentive yung mga corporation na deserving based on the current situation. Ito kasi, this is of course the wisdom of which kaya lower yung tax rate. Before, ang tax rate is 30 to 35%. So biruin mo 15% lang yung tax rate mo. Then rationale for that is you are an encouraged enterprise, or that you must contribute more to the economy of the country. That's why you are given an incentive. Okay? Improperly accumulated earnings tax is also deleted, no? So hindi na siya sinali. Ano ba tong improperly accumulated earnings? Sometimes corporation tend not to give out dividends. So yung retained earnings surplus nila it's accumulated. So one of the reason, it's also one of the tax avoidance scheme, no, paid out by corporation to avoid payment of dividend income tax. So ginagawa nila, hindi na lang sila nagre-release ng dividend. So naa-accumulate. Sabi ng BIR, sabi ng batas, all of your improperly accumulated earnings shall be taxed at 10%. Okay? So ang sabi naman ng create to, i-delete na natin to kasi some accumulation naman of earnings are justified. Like for example, there is a business expansion needed, or there is a needed acquisition of certain equipments, which justifies the holding of the income, which should have been released to the shareholders in the form of dividends. Okay, so wala na yun. Wala nang improperly accumulated earnings tax. Now, another important amendment, or another this is also a domestic corporation. So under pa rin tayo sa umbrella ng domestic corporation. So all other domestic corporation tax at 20 or 25%. But proprietary educational institutions and hospitals are taxed at the preferential tax rate of 10%. So obviously, it's lower. Okay? What's the tax base? Taxable income. Okay? Except those covered by subsection D hereof. Provided at beginning July 1, 2020 until June 30, 2023. This is the period in consideration for the current pandemic. The tax rate here in imposed shall be 1%. So from July 2020 to 2023, 1%, no, instead of the 10% regular rate, no. So paglapse ng period class, balik sa 10%. But for now, it's 1%. Okay, so to give chance for this, kasi I have a client who has a school talagang badly hit by the pandemic. I was able to compute their tax returns, no. Sole proprietor naman sila, but sobrang talagang loss, no? So it's one of the incentives given by the government. Take note of this term non-profit. Don't confuse proprietary at saka for profit because they're different. Ibig sabihin lang ng proprietary class is that they are owned by private individuals. No, they are not government owned. They are owned by private individuals or private corporations. That's why it's proprietary. As to for-profit or non-profit, it depends upon their intention. No? If the educational institution has also other activities that are not related to education or hospital, and that they are earning more profits therein than on the operation of the school or of the hospital, then it becomes for profit. Thus, it shall be taxed at the regular corporate income tax of 25%. Okay? Before kasi wala itong non-profit, no, sa old law. So basta proprietary educational institution and hospital, taxed at 10%. But now there is a clarification that it must be not for profit, because if it's for profit, again, it will be taxed at the regular rate. For the meantime, Section 27B states that these entities shall have 1% tax rate up until June 30, 2023. Okay? Okay, so continuing on with Section 27B, it clarifies that if the income from unrelated sources exceed 50% of the gross income, then the tax prescribed in subsection A, meaning 25%, yung kanina, hereof shall be imposed on the entire taxable income. So unrelated, meaning those income earned from investments or income earned from rental if they have buildings, or those if they have like aside from being a school, they have other sources of income from selling of goods or providing other services, then all of their taxable income will be considered as 25% based on the regular rate. So in other words, their income from other sources must not exceed half of their total income. Otherwise, they will be considered for profit. Okay. Ma'am, bakit sinasabing non-profit doon sa previous provision? Baka ano sabihin niyo. Of course, non-profit siya kasi it's an exercise, the purpose, no? Cliche, but ideally, the purpose of establishing a school or a hospital is to provide service or to exercise your profession, such as a law firm, di ba? Hindi talaga siya for profit. Incidental to the giving out of those services, may na-earn ka na taxable income, but it is incidental to the exercise of the profession. Pero if there are income that are not, related to the like enrollment fees, no, or service fees for hospital operations, if there are other income other than those usual income received by these educational and hospitals, then you will be subject to tax at 25%. So kahit, in other words, kahit na may earning ang school or ang hospital, but if it's still related to the intention, no, to provide educational services or to give hospital services, it's still considered non-profit. Okay. Okay. So as I said, proprietary means a private hospital or any private school maintained and administered by private individuals. So proprietary means ownership because it's owned by private people, okay? Not the government, okay? So it is necessary that for a private or proprietary educational institution be allowed to operate, it must get a permit from the DepEd or the CHED, okay, or from TESDA, okay, as may be the case. So that's the requirement. Now there is this issue kasi before walang distinction eh. All proprietary educational institutions and hospitals are taxed at a uniform rate of 10%. Ngayon, naging 25% na if for profit. So, clarify yan ng Revenue Regulation number 5-2021. So, it means that if there are profits, no, if the institution or hospital is created for profit, then it will be taxed, no, by 25%. So only those that are non-profit will remain at the 1% or 10% rates. Okay, so it was clarified. Ang daming affected na mga schools. Okay, kasi before they are regardless of whether you are it's also a tax scheme na rin, because sometimes school is created as a school, no, or a hospital is created as such, but they have other activities unrelated to the institution. So it has become a holding company na. Okay, so this one clarified it. Sabi na, unfortunately, some are hit, but it was declared in the law, and it was even clarified in a revenue regulation issued by the BIR. Okay. The only remaining thing that these institutions may do is to go to the Congress and lobby. So parang double hit, no? Double hit by the pandemic, and then this one na nag-increase bigla yung kanilang tax rate. Okay? So the issue is BIR's tax regulation excluded the for-profit educational institutions from availing of the 1% tax rate under the CREATE law. So yes, because if it's for-profit and it's proprietary, it's 25%. So for our purpose, non-profit means that no net income or asset accrues to or benefits any member or specific person. The net income or assets devoted to the institution purposes and all its activities conducted not for profit. So any income, it's reinvested to the school, and the activities, which is important, is conducted not for profit, but for the offering of school services or hospital services. Okay. Another one that's taxable, naka-specify under the CREATE law, are government-owned and controlled corporations, agencies, and instrumentalities. So they are now taxable, okay? Except very specific, so even if they are government-owned, okay, it does not necessarily mean that they are not taxable, except for GSIS, SSS, HDMF. This is the Housing Development Mutual Fund, or Pag-ibig, no? The PhilHealth, and the local water district. So memorize or familiarize yourselves with those entities. Other than that, sino ba yung na-affect nito? PCSO. Before, it's, I think, not taxable. Ngayon, PCSO is a GOCC, so it is now taxable. Now, let us go to minimum corporate income tax. So, don't be confused, class, ha? Because, ma'am, bakit may corporate tax? Ano tong minimum corporate? Dalawa ba yung binabayaran ng corporation? No. This MCIT is only an insurance, no, that the government will collect tax, no, despite the negative bottom figure or net taxable income, as long as there is a positive gross income. So kanina, 'di ba, I explained sales minus cost of sales, you have gross income. Gross income minus expenses or indirect costs, you have taxable income. The result of that, multiply it by the tax rate of 25%. Paano pag positive yung gross income mo, pero ang dami mong expenses, yung net taxable income mo, negative. So, in other words, wala ka bang babayaran na tax? Not necessarily, because you have to compare your normal corporate income tax to this MCIT. So titingnan mo ngayon, MCIT prior to the CREATE Act is 2%. Now, because of the pandemic period from July 1, 2020 to June 30, 2023, it's temporarily set at 1%. So babalik din yan sa 2% after this period. You always have to compare your regular tax due at 25% with the MCIT. Okay, so negative yung taxable income mo, pero kung positive yung gross income mo, you have to multiply it by 1%. Okay, or 2%, depending on the period. Now this MCIT will be compared to your normal tax. So kung 0 yung normal tax mo kasi loss ka, and positive yung MCIT mo kasi it's based on gross income, you will have to pay the MCIT because the law states that whichever is greater between the normal tax and the MCIT will be the one paid to the BIR. Why is this? No, what's the wisdom behind this MCIT? Of course, marami tayong mga tax avoidance schemes, 'di ba? Minsan i-overstate yung expenses, 'di ba? May mga research development costs, etc., etc. I-justify, no? Just to have a negative uh, bottom figure. So ang ending, pwedeng ilang years wala kang binabayaran na tax kasi loss. But with MCIT, the government is insured, no, to have collection. So you have to compare. So ma'am, what if meron namang taxable income na positive? At saka, of course, positive yung MCIT. So, it's easier. You just have to compare whichever is higher. Okay? So, whichever is greater, you have to pay. Okay, so a minimum corporate income tax of 2% of the gross income as of the end of the taxable year as defined herein is hereby imposed on a corporation taxable under this title beginning on the fourth taxable year. Ma'am, bakit fourth taxable year? So the first 3 years of the corporation is transition period. No? So the government also gives you leeway on that. But beginning on the fourth year of your operation, okay, this is immediately following the year in which such corporation commenced its business operation when the minimum corporate income tax is greater than the tax computed under the subsection A because we are still in subsection 27. So subsection A means a 25% regular rate for domestic corporation. So you have to compare the MCIT with the 25% regular tax rate. So, first 3 years, walang MCIT. Pagdating ng fourth year, you will have to apply all throughout. No? So, this is applicable to domestic corporation and resident foreign corporation. So, last provision for MCIT, for the pandemic period, the rate is at 1%. So, always, this is required class. This is a required tax rate compared to, which is to be compared to the normal tax rate, and the greater of which will be the one payable. Okay. Okay. Now, just to summarize the corporate income tax rate, again, I called this from Revenue Regulation number 5-2021. Just to give you a table representation of what we have discussed so far. So look at this domestic corporation. So these are the rates applicable to it. So 25% effective July 1, 2020. So, ma'am, bakit yung MCIT merong pandemic provision na 1% and then magiging 2%. Itong sa domestic corporation na regular, diretso 25%. Take note class na ang 5% na yung cut niyan eh. Kasi from 30% prior to Create Act, 25%. So meron ng incentive in fact, no, ang mga corporation for that. Now, for MSMEs on the second row, 20%. No? So you have the 5 million and 100 million threshold. No? They are also subject to the MCIT of 1% and 2%. So for proprietary educational institutions and hospitals, wala silang MCIT. Ha? So that's an interpretation coming from the BIR. So meron tayong pandemic provision na 1%. Pagkatapos noon, July 1, 2023, they will come back at 10%. Okay? To further, 'di ba? Baka na-confuse na kayo, and to give you, some analysis of some sort, because when you're an accountant, your concern is the number. When you are a lawyer, your concern is the legal implications. However, you know, you cannot really appreciate taxation if you don't try to solve some, you know, real life situation on a numerical basis. No? So if you're a CPA lawyer, that's why sabi nila you have an edge because yung utak mo analytical na, very technical. So kung nag law school ka, parang review na lang sa'yo. So anyways, kung hindi ka naman CPA, it's okay. No? Hindi naman ibig sabihin you cannot understand this. You still have the time to uh, train your mind, okay? To be technical, no, for this purpose. So as one of our examples, LMB Corporation, no, is a retailer. It has a gross sales of magkano ba to? Ang laki, 1.4 billion. With a cost of sales, so this cost of sales is direct cost, of 560 million and allowable deductions. Allowable deductions, these are the ordinary expenses or deductible expenses. 150 million. Calendar year 2021. Total assets, 180 million as of December 31, 2021. The asset includes a land costing 50 million and the building of 25 million in which the business entity is situated. So alam niyo na kung saan patungo ito, no? Aggregate amount of the fixed asset is 75 million. So that's the land and the building. So mag-analyze, ha? Assuming on the calendar year 2021 is the 5th year of operations, no? So applicable na doon yung MCIT, no? Kasi nasa 5th year na sila. So magkano daw ang income tax? So take note that the income tax shall be based on whichever is higher between the regular rate and the MCIT rate. Okay, so this is how you will compute. So you have your gross sales, 1.4 billion less direct cost or cost of sales at 560. You have gross income of 840 million. Less further by the allowable deductions of 150 million, you arrive at a net taxable income of 690 million. So regular rate is at 25% kasi ano na to calendar year 2021. So it's beyond the July 1, 2020 na starting period. So tax due under the regular corporate income tax is at 172,500,000 now. That's not the amount to be paid. Okay, compare it first with the MCIT. Rate for this time is 1%. Okay, so that's 1% of the gross income na 840 million. So mas maliit yung MCIT and income tax due shall be the higher amount. This is this is obvious kasi malaki yung income nila. Pero titingnan nyo class kung kung ang laki ng allowable deduction. So kung walang MCIT, walang collection ng government. So kung negative itong net taxable loss, no? So wala kang 25% kasi negative nga. So kung walang MCIT, the corporation shall not pay. Okay? But since may MCIT, may babayaran pa ring 8.4 million. Ngayon, class, bakit 25%? So take note, ayun, 180 million daw yung total assets. Anong ima-minus mo dyan? Yung 50 million lang na land. Kasi ang sabi sa batas, yung land where these buildings and equipments are situated, hindi kasama yung building. So kahit sinama mo pa yung building, it's still above 100 million. No? So above the threshold. Thus, you have 25%. Plus kung titingnan mo din yung net taxable income, above the 5 million threshold. So 25%. Okay, so I hope that's clear. Okay, so let's do another exercise. This time, a manufacturer has gross sales of 190 million. So medyo maliit. For calendar year, it's second year of operation. So titingnan mo na kung saan papunta yon. MCIT or no MCIT? Wala pa. Kasi sa MCIT at the start of the 4th year. Total assets amounted to 50 million. Net of value of land of 6 million. So sabi sa batas, excluding, ha? Excluding, okay? So this is already excluding kasi net of value of the land. Its manufacturing plant business are situated, okay? Cost of sales and allowable operating expenses amounted to 100 million and 50 million respectively. So how much is the income tax due for the 2021 calendar year? So compute. Gross sales of 190 million less cost of sales or direct cost of 100 million. You have a gross income of 90 million. Ma'am, do you apply MCIT? No, because it's on its second year. Okay, so less allowable deductions, 50 million. Taxable income, 40 million. Ma'am, bakit 25% yung in-apply? So titingnan natin, ano ba yung criteria? Is it less than 5 million net income? No, kasi 40 million. Is it less than 100 million total assets? Yes, 50 million. So unfortunately, you have to apply 25% because it did not reach the 5 million. It did not comply with the 5 million criteria for taxable income. So tax due is at 10 million. Okay. Now, for proprietary educational institution, this is with respect to related and unrelated activities. Kasi diba sabi kanina sa batas, pag yung mga income nila from unrelated operation exceeds or it reaches more than half of the total income, mawawala na yung preferential tax rate na 1% and 10%, no? Malilipat ka na doon sa corporate tax rate. Take note that walang MCIT ha, ang proprietary educational institution. So let's solve the problem. Rosa Private School of Values, RPSV, is a non-profit. Okay, so very clear ang problem. Private educational institution with issued permit. So may qualified din kasi may permit. So non-profit and may permit. Kung walang permit, hindi pwede, 25%. It is maintained and administered by MCGJ Incorporated, a private domestic corporation registered under the SEC. So it is part of a conglomerate corporation, okay? RPSV uses the fiscal year accounting ending July 31 of each year. On July 31, so end of year, total gross receipts, 18 million, 10 million of which came from education-related activities, while 8 million from unrelated business activities. Okay. Aside from that, cost of service and operating expenses from related activities are 2 and 1 million respectively. From unrelated activities, 3 million and 2 million respectively. So this is how it is laid down in the table. So mapapansin nyo, the gross income from related activity is 8 million. From unrelated activity is 5 million. So it's less than 50%. So it qualifies to the 1% or 10% tax rate. So 1% na nga yung tax rate. The tax base is the net taxable income. So wag kayo ma-confuse ha. Siyempre, ang tax base niyo yung total. The related and unrelated activities are only for the purpose of defining whether qualified ba siya doon sa preferential rate. Because if the unrelated activities, no, let's say that instead of 5 million, if 15 million yan, so doon na siya sa 25%. What is the tax base in determining the 50%? Gross income, ha? It's gross income, not taxable income, but gross income. Proprietary hospital. Oh, so this is a case wherein sumobra yung kanyang income. Mas malaki yung income from unrelated activities kaysa gross income from related. So, automatic, apply ka ng 25% kasi naging for profit na siya. Okay? Now, I will stop there because you may have an information overload. I think I may be doing a part 2 of this. No? So I'll see you in the second part. Okay. Thank you, class.